Let's be real. If you've been following the semiconductor space at all, you know exactly how wild the ride has been lately. But when we look directly at Micron's underlying data, it reveals a massive structural shift that might just reshape how you look at your portfolio. In this explainer, we're going to break down the absolutely remarkable story of how a legacy memory maker fundamentally transformed itself into a $461 billion titan of the AI revolution. To do that, we're taking a thematic approach today. We'll quickly run through their history and evolution, dive into their financial health, look at strategic partnerships, workforce demographics, stock performance, and wrap it all up with global competition. All right, let's jump right into Section 1, History and Corporate Evolution. You know, it's actually kind of wild to think that Micron started in a Boise dental office basement back in 1978. I mean, probably right next to the laughing gas. They IPO'd on the NASDAQ in 1984 and spent decades just navigating the highly cyclical boom and bust memory market. But here's the crucial point. Literally, their massive turning point was a bold pivot in 2025. They actually killed off their famous Crucial consumer brand to focus absolutely everything on enterprise data centers and AI. And wow, did it pay off. By early 2026, this laser focus catapulted them to a $461 billion market cap. The secret sauce here is high bandwidth memory, or HBM. Think of it as the ultimate superhighway for data in advanced AI accelerators. By prioritizing this, they shifted away from making cheap, cyclical commodities that are prone to inventory write-downs to producing highly sought-after strategic assets. This total repositioning has given them incredible pricing power and locked in long-term predictable supply agreements with global tech giants. So, let's look at what that means for Section 2. Financial health and capital. Slap this number on your radar because it's completely bonkers. We're talking a staggering 997.6% year-over-year surge in net income. They hit $13.79 billion in Q2 of 2026, with overall revenue touching nearly $23.9 billion. This absolute explosion, it was driven by gross margins that skyrocketed from 37% up to an eye-watering 74%. I mean, this is exactly what it looks like when a company secures immense pricing power in a heavily supply-constrained environment. And if we peek at their capital structure, rising operating cash flows of over $20 billion allow them to aggressively prepay $4.37 billion in high-interest debt way ahead of schedule. Total liquidity is sitting at a massive $16.62 billion, while total debt has dropped down to $10.14 billion. So they've shifted to a net positive cash position of nearly $6.5 billion. Talk about drastically reducing your credit risk. Oh, and just for some equity context, they currently maintain roughly 1.1 billion shares outstanding on the open market. Moving right along to Section 3, Strategic Partnerships and Investments. Where's all that cash going? Well, they are making massive long-term bets on domestic capacity to support this AI boom over the next couple of years. They're pouring an active $15 billion into a new facility in Boise, Idaho, and planning a staggering $100 billion megafab expansion in Clay, New York. These are unprecedented domestic investments heavily backed by the U.S. CHIPS and Science Act. It really showcases their belief in long-term demand while fundamentally de-risking their global supply chain. Plus, they're locking in preferred supplier status with the biggest players in the game. They are custom-building 12-high HBM4 memory stacks directly for NVIDIA's next-generation Vera Rubin architecture. And they're providing high-bandwidth HBM3E products for AMD's Instinct MI350X accelerators. So they aren't just supplying off-the-shelf parts anymore. They are embedding themselves directly into the foundational hardware of the AI revolution. Let's shift gears for Section 4, Workforce Demographics and Culture. Breaking down the demographics of their 53,000 global employees, we see Micron actively aligning with the United Nations Sustainable Development Goal 5, which focuses on gender equality. While their board of directors sits at a perfect 50-50 gender split, their overall global workforce is 31% female. Now, while that's still a minority, it definitely shows steady, long-term upward progress from the 29% they reported back in 2020. However, there is a catch. Female employment remains heavily skewed towards supporting business units, representing 54% of non-technical roles, rather than in core engineering, where they make up only 25%. Furthermore, women account for just 14% of vice president positions. This clearly highlights a structural barrier in STEM and executive leadership. But, to their credit, it's an issue the company has explicitly acknowledged and is actively working to address through their global inclusion commitments. All right, let's get into the fun stuff. Section 5, Stock Performance and Dividends. The stock's performance has been, in a word, explosive. Looking at the year leading up to June 4th, 2026, we saw a mind-bending 918% return. But looking back year by year since 2020 tells a fascinating story of extreme volatility transforming into structural growth. They were trading around the $70 mark in 2020 and 2021, dropped heavily into the 50s during the cyclical lows of 2022, and then saw AI-fueled breakouts starting late 2023 where it crossed 80. But the real magic? That happened in 2024 and 2025 as they completely shifted away from legacy memory. By 2026, year-to-date returns alone had hit roughly 267%. Now, when a company throws off this much operating cash flow and experiences this kind of wild stock appreciation, it naturally begs the question, have they achieved dividend aristocrat or dividend king status? The short answer is no. Because of their historically cyclical nature, they've actually only paid out dividends in 6 of the last 10 years since reinstating them around 2021. That resulted in a pretty modest historical compound annual growth rate, or CAGR, since 2015. However, signaling incredibly high confidence in their newfound structural stability, their board just announced a 30% bump to their quarterly dividend for 2026, bringing it to 15 cents a share. Let's wrap things up with Section 6, Global Competition and Outlook. Micron is definitely not alone in this race. While they face domestic pressure from U.S. players like Western Digital and Texas Instruments in legacy and analog storage, the real battle is in AI infrastructure. To maintain dominance there, they have to constantly out-innovate their 2 fiercest global rivals in the memory market, South Korea's SK Hynix and Samsung Electronics. Both of those guys are aggressively iterating on their own high-bandwidth memory chips. But here's where it gets really interesting. Despite the massive stock run-up we just talked about, the valuation metrics tell a surprising story. Micron is trading at a forward PE of just $12.97, which is actually the lowest in its peer group. With earnings per share estimated to hit $32.19 in fiscal 2026, it's absolutely no surprise that 41 Wall Street analysts recently gave it a strong buy rating. This quote from their CEO, Sanjay Malhotra, perfectly encapsulates their entire fundamental transformation. He says, "In the AI era, memory has become a strategic asset for our customers." And he hit the nail on the head. They are no longer just a vendor of interchangeable parts. They're a strategic powerhouse sitting at the very foundation of the data economy. So I'll leave you with this final thought for today's explainer. With earnings expected to grow over 300% this year alone to that $32.19 mark, and as memory stops being an afterthought and becomes the absolute engine of artificial intelligence, has the broader market even begun to comprehend its true long-term value? Thank you so much for diving into the data with me today, and as always, keep questioning the fundamentals.